ऑल राइट, वेलकम एवरीवन। एक और वीक एक और रैप मेरे साथ है मिस्टर पंकज पांडे एंड वील बिगिन टुडे सेशन। निफ्टी while today was somewhat okay but the week seemed a little disappointing. What is happening, sir, and what do we see from here on?
So, hi, good evening, Vishu. Yes, you are right. This week, literally, there was a lot of blood on the street. You've seen Nifty declining 2.5%. The broader market actually decline was even more steeper at 4% each. Now, there are a number of reasons which are attributed to this fall. One being US election, post US election. What we are clearly seeing is that their markets are doing well. Their markets are expected to do well because you will see corporate tax rate cuts. Then this quarter we have weak set of numbers, so I'll talk about that in between. And then on top of it, there are SEBI guidelines also for restricting FNO settlements. I think that has also sort of played a part because what we have seen is that uh, so you have about six weekly settlements, and we have seen that some of these indices tend to sort of become very narrow on the date of settlement or expiries. And so somewhere down the line, that is giving us sort of a concern. But good part is that the Bank Nifty expiry is done away with, so you'll have only monthly expiry going forward. So if this volatility subsides, then I think the primary reason would be the SEBI guidelines for restricting FNO. But yes, we don't expect inflows to suddenly improve with the market because I think US is going to be there in a sweet spot for some period of time. So coming specific to our market, see, we have already seen 10% kind of a cut across caps in terms of indices. So for Nifty, I think the support has been breached this particular week. So new supports would be about 23,200 or 22,900. And I think unless it does not take out the 24,500 kind of a level, I think bullish bias would be difficult to sort of maintain. And but we have seen that whenever the indices, say, if you look at now, Nifty, Bank Nifty, small cap, so they've approached or they are approaching their 200 EMAs. And typically, we over the last 2 years, we have seen that from these levels, you see a technical pullback. So I think we'll have to see next week how things pan out. But this is again a truncated week. Even the next week is also a truncated week. So from that perspective, a V-shaped or a good bounce is yet not expected. But I think if market stabilizes, that will be good news for us. So I think we are hoping for market to sort of stabilize. And I think sectorally, IT, pharma, banking relatively looks better. I think these are better places to hide.
Sir, I think inflation data is also out, at least regarding CPI. So, what is the outlook there?
So I think, Vishu, one of the concerns also was raised that since the CPI inflation has come in higher, so that is also one of the reasons which is contributing to this market fall. But I think that's not that shouldn't really hold because so while yes, inflation has come at 6.2%, expectation was 6%. See, September month we had an inflation of 5.5%. But I think if you sort of dissect the contributors, typically it is the vegetables, which is your tomatoes, you have onions, and you have potatoes. I think these are the three major contributors. So vegetable inflation is 42%. Now, if you sort of strip that out, then overall the inflation would normalize to 3.8 odd percent. So, which is pretty much a good number to have. So, I really do not think that inflation has really contributed to this overall fall. Yes, last 2 months the inflation has been higher, but we should understand that especially vegetable inflation is more to do with seasonality than anything structural. So I think this is just a transient spike in inflation what we are seeing. I don't think RBI is going to change its course basis this inflation. In fact, RBI had already pre-warned that the inflation is expected to be higher for next 2 months. So I don't think this is one of the reasons which should be attributed. And I don't see inflation as a worry for us at this point in time.
Right. While inflation does seem to be reining in, I think our SIPs are not. Mutual fund data says that yes, we've still made another ATH in terms of inflows. What's brewing there, sir?
Absolutely. I think we have in the month of October, we have seen one of the highest inflows of 42,000 odd crores. A month before, this was about 34,000 odd crores. And you look at the strip out or whichever way you cut this data, the numbers are pretty strong. So NFOs have been coming up, but even excluding NFOs, the overall inflows were at about 38,000 odd crores. This was at about 24,000 crore earlier. And I think good part this time we are seeing is that you are seeing inflows in large caps. So large caps as a category was struggling. So this time we have seen 2x inflows in terms of or twice the inflows what we used to get in large cap. But this is what we have got this time. Mid caps have seen a good inflow of 4,700 crores versus 3,100. The small cap also continues to attract higher inflows. I think good part is that the SIP numbers continue to remain sort of very good. So every month you are seeing 700 to 800 rupees increase in the SIP. So this month we have crossed 25,000 kind of a number, which is a pretty good number. And I think if you look at gross purchases and redemptions, so gross purchases have been about 70,000 odd crores. At the beginning of this year, this used to be about 50,000 odd crores. We're really seeing a good amount of gross purchases, and also redemptions have also been going up, but not in the same proportion. So people are also sort of booking profits or exiting. So that way, I think inflows continue to remain the one of the biggest positive for us in this difficult times.
Absolutely, sir. Moving on to the Q2 FY25 results, I think a lot of people are also saying, thinking that the recent fall that we have seen, some of it at least can be attributed to the recent results that we have seen. So how would you rate this past quarter in terms of results?
So in terms of compilation, what we have done is that, so for say, one, if you look at it from a setup perspective, this quarter was expected to be muted, and it is come on those lines. So we were expecting 2 to 5% kind of a profit growth. This particular quarter, the Nifty profit growth is about 3 odd percent. Top line growth is at about 6 odd percent. Now, this quarter is muted because of number of reasons. One, you had an extended monsoon. Then for exporters, you had challenges on the logistic front in terms of content not being available or available at higher prices. Then I think commodity is something which got impacted the most. So the likes of GRMs being down, or metal prices, or cement prices being soft. I think that is sort of clearly reflecting numbers, because so while profit growth is 3% for say Nifty companies, if you strip out say the oil companies and including Reliance, I think the profit growth is about 10.5%. So that way it does not really look too extreme from which is what the picture sort of comes out or gets narrated. But yes, numbers are weak for this, and I think one more reason is that the government spending has not been so much. Because one, you had election and then monsoon, so you have state elections. So our sense is second half is where things should improve, and if that does not improve, then probably we'll have to cut down numbers. But overall sense is that yes, earnings are muted, but not as bad as they've been made out to be. Sectorally, if you look at, yes, there are some pockets which have done well. So pharma is one which has done very well. This is the only sector which has delivered 15% kind of a bottom line growth. Then I think if you look at what has sort of got impacted the most is the oil and gas. So there the earnings are down about 26 odd percent. So that is the segment which has been impacted the most. Otherwise, other segments have grown in low to mid single digit kinds. Now, if I sort of dissect this number from a mid cap or a small cap perspective, so it's again a washout quarter from a mid cap and small cap perspective. So while top line growth has been 8 to 9 odd percent for both mid cap and small cap, but bottom line growth has been muted. So it's about 6.5% for mid cap, and for small cap for 8.3%. It's very difficult to attribute a reason, because see, small caps is a fairly large universe. So there are some pockets which have done very well, but there are some pockets which have done very badly. So it's very difficult to pinpoint why this has been a decline. So I would take this as a one-off quarter, and with a lot of one-offs being there. So from that perspective, I think I really do not take this earnings as very negative. Yes, it is muted, but definitely not a showstopper.
Absolutely. Could we delve into pharma a little bit deeper about the results? You said they were particularly good.
Absolutely. So I think pharma, there are two major segments which is really firing up. So if you sort of aggregate the earnings of, say, Sun Pharma, DRL, Cipla, Torrent, and Zydus, now their overall top line, for example, the growth has been about 12%. But 10, so of this, the growth in the US market is fairly high at about 19 odd percent. Domestic market growth, on the other hand, is at about 10 odd percent, which is the normal growth rate what you see. And despite these companies spending on higher R&D plus a lot of selling and other general expenses, I think their margin profiles have come out good. EBITDA growth has been about 16 odd percent. So from that perspective, this is one pocket which continues to sort of do come out with good set of numbers. And accordingly, we have buy on Sun Pharma, we have buy on DRL, we have buy on Cipla. So I think all the tier one companies we like in the pharma, besides obviously the CRAM companies, which I keep talking on a regular basis.
Right. I think another highlight of this week was SBI results. It had taken quite a bit of beating after the results, I think. So what's brewing there, sir?
So SBI has a typical behavior in terms of price performance. So prior to results, we see price appreciating, and post that we see price gets corrected. But coming specific to numbers, the company delivered a very steady performance. Overall, advances growth was about 15 odd percent, again driven by corporate 18% kind of a growth. Agri did well for them, and SME also did well for them. On the retail side, personal gold loans did for them, and home loans also sort of did well. Now, deposit was again the weak link, has been the case for most of the banks, but it does not really impact so much in terms of PSUs because their CASA has been good. So despite this, CASA ratio is at about 40 odd percent. Now, while margins have sort of declined by 8 odd bips to about 3.14%, but I think what was the positive surprise was the more than 40% kind of other income jump, and that is largely led by the treasury gains. And companies are guiding for a very stable growth rate in terms of advances growing at 14, 16 odd percent, credit cost remaining at about 50 bips, ROAs at about 1%. So I think no negative surprises from the SBI side, and I think which is why we feel that within PSU banks, this is our top pick with a target price of 1,000. So nothing to sort of complain in SBI numbers.
Awesome. I think we also had results from our favorite bullet maker, Eicher Motors. So what's happening there?
So I think one consistent commentary from most of the two-wheeler is that second half is what they are expecting to be better or good growth. So this company also came out with decent set of numbers. So while when we sort of look at from a overall perspective, the margin there was a decline of about 100 bips in the margin, and also the margins were down in in the CV segment. But I think from outlook wise, what the company is guiding is a high single digit kind of a growth rate. But our sense is that with the kind of number of launches which the company did, including the electric two-wheeler, I think numbers are expected to be better, and the margin profile is also expected to be better. So second half is where the optimism lies, and we've seen of late that the monthly numbers have started to do well for this company. So our previous target has been about 57.50. So I think we are liking this company also structurally from the perspective that this is one of the best premiumization plays in two-wheeler. Because obviously there is an aspiration to own a bullet. So I think this company is rightly placed in the premiumization curve.
Great. And now finally coming to the most awaited section of our wrap, hidden gem. Which will it be this week, sir?
So it's a small cap company. We have been, or I have recommended this company earlier also. The company's name is Ratnavir Precision Engineering. Here we have revised our target to 290. Now, the reason for liking this company is that from FY24 to say FY27, revenue is expected to be 2x, EBITDA is expected to be 3x, and bottom line also is expected to be 3x. Now, when you look at the recent numbers, whether it is for H1 or whether it is for quarter, so for example, in the quarter, the revenues have grown at about 60 odd percent. EBITDA again has improved to 10.5%. Profit has jumped by 54%, and something similar kind of a number even from a H1 perspective. Now, the reason for liking this company is that this company produces finished stainless steel sheets, pipes, and tubes. And demand for this segment has been growing at 13, 14 odd percent and likely to sort of remain there because obviously the demand for stainless steel in products like, say, elevators, escalators, or commercial kitchens or bus body is expected to remain stable, or metro or railways. So I think this company is expected to be a beneficiary of the same, and which is why we like this company. And I think valuation wise also it's look attractive. It's trading at about 15 times FY26. So I think with a very strong or good drivers in place, I think this company has already been delivering good set of numbers and expected to deliver a good set of numbers over the next 2-3 years. And which is why we like this company. And I'm recommending this again with a target price of 290.
Awesome. Well, that was it this week. We hope to see you next week as well, our audiences. And thank you so much, Pankaj, sir, for your time.
Thank you so much.
Investment in securities market are subject to market risk. Read all the related documents carefully before investing.